everybody. Scotty Milas, another episode of All Things Considered Franchising, powered by Scott Milas, franchisecoach.com. Today's guest is president and founder of the Largo Group. I know we're supposed to be talking about franchising, but the Largo Group, I guess in so much term and in so many terms or basic sentences, it's all about the numbers. Numbers don't lie. So we have Gannon with us today, who's going to talk to our audience, whether you own a franchise, thinking about it, have a business, you're an independent, how important the numbers are in the business. And it's not so much just outsourcing the work and getting it back and signing your name and sticking it in the mail to send it back to the IRS or your local state, but it's also understanding the numbers, the methodology behind the numbers to make your business thrive and be, well, successful. So welcome to the show, Ann.
Oh, thank you so much for having me. It's great to be here.
And let's start out a little bit about your background. Again, I don't mean this in a negative sense, but there's this stereotype about people who are into numbers, that accountant, that the pocket holder and the pens and the slider and
yes.
And that's not the case, because let's face it, the numbers, the financials of a business, whether it's large, medium, or small, or even a Fortune 100, 500 company, are very important. So let's talk about your background, how you got into this, and what got you interested in numbers, so to speak, and kind of go from there.
Yes. So I grew up with the dream of becoming a professional golfer, or actually was not to be an accountant. So all the way through college and everything, I traveled the country, really pursuing my dream of golf. What a lot of people don't realize is, what that looks like is you're flying to random places all over the country. You're staying in private housing because there's no money in women's golf. So you're meeting a lot of people along the way. And what I realized when I got to, being professional was that I was always so fascinated by business and the people that I had met. And I had always been very curious about, like, how did they get to be who they were? If it was the guy who owned the restaurant in town, or, someone who had their own, was an entrepreneur, which seemed to be a lot of the times that's who you were meeting. How did they get there? And so when I turned pro, I realized that, I really wasn't fascinated about the golf swing or how to get more distance. It was really, this journey that I had witnessed along the way. So rather than, prolonging the inevitable, I was like, I think I'm really going to go figure out what that is. Like, what am I curious about? What am I interested in? My dad had been an entrepreneur, so I'd kind of grown up in business. And so I had great advice from one of my professors in college when I came back. Was just like, my first degree had been in economics, and she's like, economics is great, but accounting really is the other side of it, right? It's just the detailed part of it, but it really is the same curiosity that you enjoy. And she, the best advice I ever got was, her thing was, accounting is a skill, right? Don't look back at, how you did in your accounting 101 course, because you weren't really thinking you were going to be an accountant at that time, right? But if you apply yourself the same way you applied yourself in golf, there's no reason you can't do well in this skill, and it'll be a skill you'll have for your life. And so that was sort of the mindset I went into my master's program with, and sort of how I attacked even, first job in public accounting. But what I realized in the firms was, the model of traditional accounting is fine, right? It does well. These firms do well, but it's not really designed for that entrepreneur. And so there's this inherent frustration that exists, because you have these accountants that have to finish the return as quickly as possible, right? Their billable hours, that's how they make money. And then you have these entrepreneurs who have no idea what accounting is, and they're just waiting for guidance or help or someone to just walk them down this path. And there just isn't time, right? If you're handing someone a return on March 1st, there just isn't time to explain the balance sheet, right? We just have to get it in, and then everyone procrastinates and lets it go. And then here we are the next year doing the same thing again. It just doesn't work, right? So my thought right away is, if you could change this, right, and make it more of a methodical approach, like throughout the year when the accountants have more time, the businesses, don't see it as important, but if you could convince them that it is important, you could get to next year and be in a much better place. And so that's really where the Largo Group came from. Largo means methodical in musical terms. And so the idea of if we could take apart what we're doing in that rush time and break it out throughout the year, I think you could get to a much better outcome for both sides and something that really generates value add.
That's interesting. So let me ask you a question. At scottmilasfranchisecoach.com, in most cases, 75, 80% of the people that I'm speaking with, my firm is speaking with, we're talking to people that are getting into business for the first time. Let's put aside the fear and anxiety. I mean, that's the normal, it's a big step. So that first time entrepreneur, whether it's a franchise, someone speaking to me, or it's an independent, they want to buy the local pizza shop or they want to buy the local shoe shop, whatever it may be. What should be the first step on the financial side? Forget about the financing side. I mean, securing financing if they're not going to utilize their own money. But what are some of the things, or what are the 1 and 2 things that someone should be looking at when they're looking at a business, and flash forward in 6 weeks, they're going to own the business? What financially should they focus in on? I mean, does that make sense? I mean, everybody says, well, I got to do my tax returns. I got to do this. I got to do that. But, there's got to be a hidden agenda, I would think, about the numbers. So in your methodical approach, the Largo approach, what should somebody be looking for? I mean, what should they be concentrating on?
Yeah, what we try to do right away, and I think that's a great, place to start, because I do think that people who are getting into business for the first time, it's so overwhelming. And I think a lot of times the accounting comes last, right? Because you have to learn the operations, you have to learn how to open the door, you have to learn how to service the customer. There's so much operation that you have to do at the beginning that it's easy to put the accounting aside, and then 6 months later, a year later, you're like, oh my God, I have no idea what this looks like. So what we really try to do is break it out weekly, right? So even if you don't know what the next 6 months are going to look like, and there's all these different scenarios of sales and transfer, and whether you're brand new or you're buying it from someone else, like there's a million different things that could happen in that first 6 months. What we try to do right away is break it out into a weekly projection. So you might not be able to project the first month, but maybe you could project the first week, and then tying that back into your operating expenses. Again, rent is once a month, and we don't have to go down the rabbit hole of dividing rent by 4. I mean, that is what it is.
Okay.
But, payroll is probably weekly. There's probably a schedule for whatever your employees are. So what does that cost every week? What are your, if you are in hospitality, what is your food cost? If you're, retail, what does that purchase look like? And breaking that into a weekly cash flow, I feel like is a really good place to start, because then with that information, you can go to the next week and the next week, and all of a sudden feel like you have a little more control over the decisions that you're making every day.
So when somebody is investigating a business model, now in franchising, it's a little bit different because the franchisor can only disclose the financials that's published in the item 19. And that could be all over the place as far as how they do it, whether it's net income or whether it's sales, top third, bottom third, whatever it may be. Independent's a little bit different. You're going to get P&Ls, although there are P&Ls in certain franchises that you can get depending on how it's whether it's published in the item 19. But if somebody was to analyze a business or wanted to get into the business, are these steps that you're talking about, these breakdowns, as important before you make the investment to get an idea of what the business is all about and really kind of get a true sense of the numbers? Or is it somebody come to you after the business has been purchased and or the investment has been made in a startup, a franchise, starting a brand new location, and putting the pieces together financially, the financial numbers?
Yeah, I mean, I think it's very important to look at when you're analyzing a business, as you're making that decision, to know that there's things that you're going to do differently. So while it's important to look backwards, in prior years, I think it's also important to look at how are you going to operate this business. And I think it's really important I think the biggest thing that's sometimes forgotten when people are making that decision is, how does your life work today, and how is your life going to work as an owner? So, for example, if you're planning on being there 6 days a week and you're really going to be the manager, then we want to make sure that you are compensating yourself for this and you're building that into the model. Because I think what happens a lot of times, especially in that first year, is you sacrifice everything and then you're
Right.
just annoyed, to say the
Yeah,
least,
no, you're
or more
absolutely
than
right.
annoyed,
No, you're
because
absolutely
you're
right.
like,
Yep.
I've gone a year and I haven't paid myself. And I would say if you go back to that weekly model, I'm not one of those accountants who thinks you shouldn't pay yourself, right? Like, you've taken on all the risk, you've taken on all the stress. You have to do everything. You're wearing 12 hats where you probably came from like a corporate job or something else where you weren't wearing 12 hats. So we want you to make money. We just want to build that expectation
Right.
into the
Yep.
model from the beginning. So being realistic with the salary you're giving up, all of that becomes so important from the very beginning. And that's where I say, like, you're going to do things differently than they were before. So if it were two people running a business and now you're taking over, you just want to make sure that those
Right.
fundamental questions of how this is going to operate, especially with your time, are, approached from the beginning.
Yeah, well, it's the cash flow of a business. How much of that cash flow are you going to take as a salary? What are you going to pay yourself? Are you paying yourself too much, and that's why the business doesn't have any money to reinvest in itself? So, that's great advice. I remember one time I won't get into too many details, but someone called me. We'll leave it at that, and said, "We're not making any money. I want to get rid of this business. We're not making any money." And I said, okay, well, send me the P&Ls. Let's take a look and everything. And the long and the short of it, you're gonna laugh, and I know you are, that in their travel expense, they were showing $7,000 a month. So of course, my question back to them is, what is the $7,000 a
Right.
month for? I said, oh, well, we go to Las Vegas once a month. And I go, well, isn't that income?
Right.
Obviously I'm assuming you're doing business out there, because you couldn't claim it as an expense if you
Right.
weren't. But, to say that you're not making any money, but the
Yeah.
business is spending 7,000. So don't spend 7,000, or don't spend 7,000 on the trip, spend 3,500 on the trip and pay yourself $3,500 salary. So
Right.
again, those are the kind of things that people don't understand, or kind of can't read the P&L and understand that where are the numbers coming from. So dissecting those numbers is very important to understand the cash flow and how sound the company is. Correct?
Oh, definitely. And that's where I think it really starts weekly and tying it back to the cash balance, because ultimately I think there's always times where it's like, oh, my cash balance didn't go up, in the last 30 days. But like you said, did you, fill up your tank of gas with the company card? Does the company pay for your automobile? Like, there's probably expenses in there that have owner benefit. And that's okay, right? Like you said, obviously we want to make sure they're legitimate business expenses, but assuming they are, right? Like, you can't really say you didn't make any money. We first want to kind of dissect those expenses, because I think what happens is it's easy to then add that to our stress. Like, and I'm not making any money. I'm here 6 days a week and I'm not making any money.
Yeah, yep. And you want to run, and you want to run the business right on the accounting side. My father like I said, my father used to tell me that numbers don't lie, but he also said that you don't want to knock at your door at 1 o'clock in the morning and it's two guys in a black suit with IRS written on their.
No, we don't want that.
You don't want that. So you have offices in Boston and Philly.
Mhm.
Privately held company, something you've been in business for 8 years. That's an achievement itself as an independent. So congratulations.
Yes.
But let's play a little game here. One or two common mistakes that you see that people make who are getting into the business ownership role for the first time on the accounting financial side. What are some of the one or two mistakes people make, and what is the remedy to prevent those mistakes from happening?
I would say the biggest mistake is assuming that somebody else will take care of this side, right? And I say that as somebody who offers bookkeeping services in my company, but because I'm great, I'm happy to do it. I love our bookkeeping clients. I think it's great that they have us, save them time. But if you're getting into it for the first time, just like anything else in that business, you have to understand what this part of the business is first, right? Like, you need to understand, where is your QuickBooks file and where is all the information coming from? Because the biggest mistake across the board is there's just a disconnect in where the information comes on, right? The biggest one I see, especially knowing, we deal a lot with hospitality, is, well, you're tracking your sales from your point of sale system and you're looking at it, and your bookkeeper's, recording the cash deposits. Well, they don't match, right? They're fundamentally two different numbers. So if
Right.
we haven't even figured that out, like there's no way that P&L is going to make any sense to you, because then inherently you're going to be frustrated because you're going to say the sales number is not right. Well, she doesn't know to use the point of sale system. She or she just knows to use the cash deposits. And same would be true with labor, right? Our tips, like all these basic things, it starts with taking an hour and just really asking good questions of, where is this information coming from, right? Like I've had people screaming and yelling because, they never sent us their utility bill. We pulled the utility expense that may have been 2 months worth of utilities
Right.
from the bank statement, right? So we have to first understand, are we taking bills or are we taking expense? Like there's fundamental things that maybe an hour's worth of time, we could break it down and make sure when you pull your P&L, it's not a waste of time to you. It's the numbers as you want to see them. So I think that's the first. And again, I don't think it's weeks of time. I think it's a couple of hours at the beginning before the frustration grows. And then I think the second part is really having an understanding of how much cash you have in this business and how much cash this business needs. Because even your great companies, right? There are times of the year where it's truly a timing issue, where you're growing and you had to hire an additional person and then the sales come in a month later. So there's always going to be cash struggles, right? Like no matter where you are, if you're looking to grow, cash is going to be a pain at some point. But if you have a good understanding of how much cash you need, whether it's, I always want to have 3 payrolls, I always want to have 4 payrolls, whatever that number is, defining that at the beginning will help alleviate some of the cash. Because what happens during the growth times is we get stressed and then we don't look. And then all of a sudden we're scrambling to make a payroll.
It creeps up on you pretty quickly. Yeah. In franchising, at least when I take my clients through that financial breakdown or startup financing, I always tell people, businesses have never gone out of business because they've been overcapitalized. They've always gone out of business because, as you just pointed out, they wake up one morning and there's that big negative red number, or they have a 0 and they don't have any money. So they're undercapitalized. In your opinion, and your thoughts on financing or a startup or getting into financing, how important is it to be capitalized right, yet not be overcapitalized to think that you have so much money and I can go out and buy that company, Ferrari, or, that company boat?
Yes.
I think you understand the point. So
Yes.
how important is that strategy to capitalize yourself right on the financing side?
Yeah, I think it's important I think the people that I've seen the most successful have used debt strategically or use some sort of financing strategically. So I think you don't want to have too much, because I've seen that where you just are taking on so much debt that any of your growth is really just, servicing the debt, and it's, just sort of this vicious cycle. But I think from the beginning, you want to be very realistic about what that first year looks like, because even when you're open 2 or 3 months, cash flow is just such a lag, right? Like, but you're paying payroll before you're open, you're just immediately in the hole, no matter what business you're in, when you get into that first 6 months. So I think being realistic about what that looks like, not being afraid of debt, but just making sure that the numbers make sense. So, does it make sense to finance my equipment versus buy the equipment up front? That's a question that really has to be as much about cash flow as it does about the interest rate. Because so many times it's like, well, I don't want to pay 6% interest. Well, you might be saying something different if you're stressing about payroll 3 months in, right? Like 6% interest is not ideal, but if it gets you to where you want to be 6 months or a year from now, then you can always pay out. Like I said, the problem is never having too much cash. You can always be strategic a year in and pay down some things that you took out at the beginning just to make sure you have enough cash. So I think just a holistic approach to cash flow, where you're, yes, looking at the interest, yes, looking at the debt service, but also really planning out that first year of being open, just gets you to a point where you're going to be successful, a year plus in.
That's great. Oh, that's great advice. We're closing down to the end of the podcast here, this session anyway, and any guidance or expertise you want to share about your services, maybe how people can reach out to you for any questions. Again, we're talking to Ann Gannon, who's the principal and founder of the Largo Group. And I don't mean this in a negative sense, but kind of that unconventional accounting approach where the approach is more of, I want to educate you on your business and your business numbers so you have an understanding, not just do your quarterly, yearly filings and, have to call you up and say, hey, you're out of money kind of thing. Really kind of make sure that your business matures and you become successful. But so just take us through how somebody could get in touch with you and, just kind of some overall guidance for people who may be looking to get into a business for the first time.
Yeah, so I definitely think, check out our website. I mean, what we really try to offer are, the same set of services that most accounting firms offer, whether it's, accounting, bookkeeping services, all the way up to tax returns. But again, our core belief is that through our team's work with you, that we would educate you as well, so that you could do it if you had to or wanted to, but also you have full transparency into exactly how we're putting the information together. The other thing I think that really sets us apart is that we always are forward looking. So helping, build a budget for 2023 with you, making sure you have the tools in place to where you can look forward and catch problems before they become problems, right? So check out our website. We offer, free seminars throughout the year. We have a lot of great education there for new business owners, because it can be the best thing you ever do if done the right way at the beginning.
Healthy business, healthy mind, and you sleep well. So last question, and I know our audience is hoping I ask this. The most famous golfer you have ever played a round of golf with?
Oh, yes. So my claim to fame a little bit is that I beat Michelle Wee in match play. So that was
best round you ever shot?
66.
66. And that was on 18 holes, right? 9?
Yes. No, 9. Yes.
Only kidding. I asked that because I had a friend of mine. We were out in Montauk, played Montauk Downs one year, and this is many years ago. And we came off the course, and I said, "So how's it going?" He says, "Yeah, I shot a 66." And I said, "Wow, that's great." I said, "You're on fire." He says, "No, that's just for the front 9."
We're making the turn. Yes.
But anyway, this is Scotty Milas, host of All Things Considered Franchising, powered by ScottMilasFranchiseCoach.com. Scott Milas Franchise Coach focuses on people that may be in career transition, looking to possibly explore business ownership for the first time, investigate and researching franchises. Maybe you're interested in selling a business that you have. All Things Considered Franchising is a podcast devoted to entrepreneurship, the franchising industry, and of course, independence as well, providing some information and guidance on how to be successful in business. We've been talking with Ann Gannon, who is the president and founder of the Largo Group. And it's been great. We wish you all the best and hope to have you back sometime soon.
Yes, thank you so much. Have a great day.
Have a great day. This is Scotty Milas signing off.